Welcome back to Alpha Recap. Markets closed mixed today, and we had a lot to unpack. Policy moves, a big buyback, and some wild activity in leveraged ETFs. As always, if you have questions, you can reach us at stockalpha.ai. Matt, great to have you.
Thanks for having me. What really stands out here is how policy headlines and corporate actions moved the tape almost immediately today.
Yeah, start with the big policy headline. The White House reportedly moved to roll back a Biden-era contractor rule, and gig platforms reacted fast. Uber and Lyft finished the day higher. Walk us through why that mattered so much.
Right. The contractor rule was all about whether gig workers get classified as employees or contractors. The rollback reduced the near-term risk of reclassification, which keeps companies' cost structures intact. For investors, that meant less regulatory uncertainty about labor expenses and margins. When you step back and look at this, labor costs are a huge input for those business models.
So, lower reclassification risk basically preserves the current operating model for those platforms. That was a pretty clear catalyst.
Exactly. But a quick note, this is still conditional. Expect volatility when the Labor Department posts follow-up guidance or if there are legal challenges. Short-term win, longer-term watch list.
Got it. Another big move came from corporate capital allocation. Freshworks announced a $400 million buyback, and the stock rallied. Explain why buybacks still matter, especially for growth names.
Buybacks do a few things. One, they reduce the float, so earnings per share math can get better even if revenue growth is flat. Two, they signal management confidence, like, we think the stock's a good use of cash. Three, in an environment where growth can be patchy, buybacks support multiples. Freshworks' $400 million program was a notable step, and investors priced it as a vote of confidence.
And folks should track the execution schedule on that, right? The headline is one thing, actual buybacks take time.
Right. The timing and pace of repurchases matter for float reduction and for when the market really prices it in. If they announce an aggressive plan, you could see more immediate impact. If it's stretched over a year, less so.
Switching gears. Volatility was concentrated in leveraged and inverse ETFs tied to semiconductors and miners. We saw the leveraged semiconductor short ETF down about 4.5% on very heavy volume. And the leveraged short gold miner ETF also dropped with huge trade counts. That was loud.
Yeah, that tracks. Leveraged and inverse ETFs amplify moves. When headlines hit and flows rush in, these products can swing way more than the underlying stocks. The volumes were eye-popping, about 332 million shares in that semiconductor short ETF and around 199 million shares in the gold miner short product. And that kind of volume can create liquidity and execution quirks.
Simple terms for listeners. Leveraged ETFs use borrowed money and derivatives to deliver multiples of daily moves. So when the market whipsaws, those multiples make both gains and losses bigger, right?
Exactly. They re-leverage each day, which is great for short-term tactical plays, but risky if you hold through big swings. Practical takeaway. Reassess position sizing and stop rules if you use these instruments.
Quick reaction segment.
Right.
Let's talk policy beyond labor. The Clean Energy Choice Coalition released a 4-bill package in Illinois aimed at balancing reliability and affordability. That was a local but significant move. Who should be watching?
Utilities and clean energy developers with Illinois exposure should be on watch. Think Exelon, Ameren, and NextEra. State legislation affects permitting, incentives, and project timelines, and those things change near-term earnings and longer-term CapEx plans. So, while it's regional, the ripple effects for companies with big project pipelines can be meaningful.
And healthcare policy is in the mix, too. Ovation Healthcare put out a playbook for hospitals on H.R. 1, which triggered vendor planning and potential procurement shifts. What did that signal?
It signaled that providers are already anticipating changes and adjusting operations. Vendors that serve hospitals and shared services could see accelerated procurements if that playbook becomes a template. So companies in the healthcare tech and services space should watch contract flows closely.
Short reactions. Yeah, absolutely.
Honestly, I was a bit surprised by how quickly some providers moved on that playbook. It shows procurement cycles can re-accelerate fast when there's clarity, or perceived clarity.
Let's cover AI and commercialization. Athena, a private AI platform, claimed 50 million connected endpoints, backed by names like Zebra Technologies. And Guardforce extended a smart retail partnership in Thailand. What does this mean for public companies?
Two things. One, AI is moving from cloud experiments to physical automation, sensors, robotics, logistics, and that drives incremental hardware and software demand for public suppliers. Two, regional commercial wins, like Guardforce's deal, are early indicators of potential revenue cadence when pilots scale into bookings. So even if Athena isn't public, the scale matters for the supply chain.
Put another way, private-scale AI growth creates downstream demand that public hardware and software vendors can capture. Good intel for investors.
Yeah, and it's why you watch both private and public ecosystems. One fuels the other.
Public sector hiring and infrastructure moves came up too. SDI Presence hired someone to push Illinois state, local, and education sales. And TrueVista Fiber added a VP of marketing to drive subscribers in South Carolina and Georgia. Why do hires matter here?
Hires are early indicators of pipeline building. When a company expands its go-to-market in a region, it usually means they expect bid activity or want to accelerate wins. For public peers like Tyler Technologies, Leidos, and SAIC, more active procurement often results in contract awards that show up in revenue. For broadband names like Lumen and Charter, regional competition can affect average revenue per user and CapEx timing.
So those personnel moves can be the canary in the coal mine for future contract announcements. Interesting.
Yep, keep an eye on RFP timelines and awarded contracts after those hires.
Back to market structure and volatility for a second. We touched on leveraged ETFs, but what should active traders and investors change about their playbook after today?
First, reassess position sizing in leveraged products. Second, widen your view on liquidity risk. Big flows can dry up liquidity at certain price levels, widening spreads and making executions worse. Third, for longer horizon investors, focus on direct exposures rather than derivatives that are meant for daily tactical use.
Short reaction. Hold on, say that again?
Don't use leveraged ETFs for multi-day directional bets unless you understand daily rebalancing and the path dependency of returns. For multi-week or multi-month positioning, look at the underlying stocks or sector ETFs instead.
Let's do a quick-fire rundown of the headlines listeners want to remember.
Okay, Clean Energy Choice Coalition's Illinois 4-bill agenda. Watch Exelon, Ameren, NextEra. Ovation Healthcare's playbook on HR 1. Monitor vendor contract flows. Freshworks approved a $400 million buyback. Track execution. Athena claimed 50 million endpoints. Positive for industrial AI suppliers. Guardforce extended a retail deal in Thailand. Contract value pending. SDI Presence hiring for Illinois sled sales. Watch Tyler, Leidos, SAIC. TrueVista Fiber's marketing hire could heat local broadband competition. Watch Lumen and Charter. And finally, leveraged semiconductor short and leveraged gold miner short ETFs fell sharply on heavy volume. Reassess exposure.
Nice recap. What should listeners watch tomorrow when the market reopens?
Look for Labor Department guidance or White House statements clarifying the contractor rule rollback. Any nuance will move Uber and Lyft. Check for Freshworks filings or investor relations comments on buyback timing. Monitor the Illinois legislative calendar for committee hearings or bill text on the energy package. And watch options and ETF flows around leveraged products. Continued heavy activity could broaden sector volatility.
Final quick takeaways, in plain English.
Policy headlines moved markets today. Treat them as catalysts. Buybacks like Freshworks can support multiples and reduce float, but execution matters. AI is accelerating into the physical economy, creating real demand for hardware and services. Public sector hiring and playbooks are early signs of procurement cycles reviving. And leveraged ETFs can amplify risk, manage sizing and stops carefully.
Perfect. Short reactions. Got it.
Yeah, absolutely. Any final thoughts? I mean, when you step back, the dual narrative here was pretty clear. Short-term catalysts from policy and buybacks, and structural risk from market mechanics.
Exactly. Thanks, Matt. That wraps our recap. If you have questions about anything we covered today, head to stockalpha.ai where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening. We'll see you next time.